Imagine a game of a chess where two superpowers are locked in a battle of wits. The United States and China are engaged in a trade war that is impacting the entire world. But what's behind this conflict? Let's dive in.
World's leading superpowers are locking horns.
Game on here. A trade war between the United States and China is here.
China never paid 10 cents to this country. They ripped us off. We're putting on a 25% tariff without exception.
They don't take our cars. They don't take our farm products. They take almost nothing. And we take everything from them.
I drop a 25% tax on China.
We urge the U.S. to correct its action and stop weaponizing trade issues.
The country's finance ministry announcing a 15% tariff on U.S. coal and liquefied natural gas.
This is the beginning of making America rich again.
Hey everybody, welcome back to Rits Capital. Donald Trump's dislike for China stems from several key issues. Number 1. Unfair trade practices. China's policies have constantly favored his own businesses, making it difficult for American companies to compete. Number 2. Intellectual property theft. China has been accused of stealing American technology and intellectual property, costing the US billions of dollars. Number 3. Significant trade deficit. The US has a massive trade deficit with China, which Trump sees as a major problem. Number 4. China's growth dominance. China's rapid growth in key industries like tech and manufacturing has raised concern in the US. Number 5. Currency manipulation. Trump has also accused China of manipulating its currency to gain an unfair trade advantage. The US-China trade relationships has been strained for years. In response, the US has imposed tariff on $200 billion worth of Chinese goods. The tariffs range from 10% to 25%, affecting a wide range of products, from electronics to furniture. So, what are tariffs? Simply put, tariffs are taxes imposed on imported goods. Think of it like a border wall, but instead of keeping people out, it is keeping cheap foreign goods out. So what does the trade war mean to an Indian investor like you? Well, here is the good news. India can benefit with the trade war by increasing its export to the US. In fact, India's export to the US have already increased by 12% in the last year. Indian businesses can also benefit from the trade war by diversifying their exports and investing in new markets. For example, India can increase its export of textile, pharmaceuticals and IT services to the US. However, there are also risks for Indian investors. The trade war can lead to higher prices, reduced demand and lower profit for Indian businesses. Additionally, India's import from China can become more expensive due to tariffs. So, what can Indian investors do to navigate their trade war? Diversify your portfolio, invest in Indian businesses that export to the US, and keep a close eye on the trade war developments. In conclusion, the US-China trade war presents both opportunities and risk for Indian investors. By understanding the implication and taking informed investment decisions, Indian investors can navigate the trade war and come out on top. Are you ready to diversify your portfolio and stay ahead of the curve? Looking for an end-to-end solution to navigate the complexities of the US-China trade war? Reach out to the Rits Capital, your trusted partner in investment management. Our team of experts will help you to make informed decisions and achieve your financial goals. Don't let market volatility hold you back. Take control of your investment today. That's it for today, folks. I'll see you in the next.